Senator Bunning.
Thank you, Mr. Chairman. 4 years ago, when you came before the Senate for confirmation to be chairman of the Federal Reserve, I was the only senator to vote against you. In fact, I was the only senator to even raise serious concerns about you. I opposed you because I knew you would continue the legacy of Alan Greenspan, and I was right. But I did not know how right I would be and could not imagine how wrong you would be in the following 4 years. The Greenspan legacy on monetary policy was breaking from the Taylor rule to provide easy money and thus inflate bubbles. Not only did you continue that policy when you took control of the Fed, but you supported every Greenspan rate decision when you were on the Fed earlier this decade. Sometime you even wanted to go farther to provide easier money than Chairman Greenspan. As recently as a letter you sent me 2 weeks ago, you still refuse to admit Fed action played any role in inflating the housing bubble, despite the overwhelming evidence and the consensus of economists to the contrary. And in your effort to keep filling the punch bowl, you cranked up the printing presses to buy mortgage securities, Treasury securities, commercial paper, and other assets from Wall Street. Those purchases, by the way, led to some nice profits for the Wall Street banks and dealers who sold them to you, and the GSE purchases seem to be illegal since the Federal Reserve Act allows only the purchase of securities backed by the government. On consumer protection, the Greenspan policy was don't do it. You went along with his policy before you were chairman, and you continued it after you were promoted. The most glaring example is it took you 2 years to finally regulate subprime mortgages after Chairman Greenspan did nothing for 12 years. Even then, you only acted after pressure from Congress and after it was clear subprime mortgages were at the heart of the economic meltdown. On other consumer protection issues, you only acted as the time approached for your renomination to be Fed chairman. Alan Greenspan refused to look for bubbles or to try to do anything other than to create them. Likewise, it is clear from your statements over the last 4 years that you failed to spot the housing bubble despite many warnings. Chairman Greenspan's attitude toward regulating banks was much like his attitude toward consumer protection. Instead of close supervision of the biggest and most dangerous banks, he ignored the growing balance sheets and increasing risk. You did no better. In fact, under your watch, every one of the major banks failed or would have failed if you had not bailed them out. On derivatives, Chairman Greenspan and other Clinton administration officials attacked Brooklyn Bourne when she dared to raise concerns about the growing risk. They succeeded in changing the law to prevent her or anyone else from effectively regulating derivatives. After taking over the Fed, you did not see any need for more substantial regulation of derivatives until it was clear that they were headed into the financial meltdown, thanks in part to those products. The Greenspan policy on transparency was talk a lot, use plenty of numbers, but say nothing. Things were so bad, one TV network even tried to guess his thoughts by looking at the briefcase he carried to work. You promised Congress more transparency when you came to the job. You promised us more transparency when you came begging for TARP. To be fair, you have published more information than before, but those efforts are inadequate, and you still refuse to provide details on the Fed's bailout last year on all the toxic waste that you have bought. And Chairman Greenspan sold the Fed's independence to Wall Street through the so-called Greenspan put. Whatever Wall Street needed a boost, Alan was there. But you went even farther than that when you bowed to political pressure of the Bush and Obama administrations and turned the Fed into an arm of the Treasury. Under your watch, the Bernanke put became a bailout for all large financial institutions, including many foreign banks. And you put the printing presses into overdrive to fund the government spending and hand out cheap money to your masters on Wall Street, which they used to rake in record profits while ordinary Americans and small businesses can't even get loans for their everyday needs. Now I want to read a quote to you, Mr. Bernanke. That's a Freudian slip, believe me. Here's a quote. I believe that the tools available to the banking agencies, including the ability to require adequate capital and an effective banking receivership process, are sufficient to allow the agencies to minimize the systemic risks associated with large banks. Moreover, the agencies have made clear that no bank is too big to fail, so that bank management, shareholders, and uninsured debt holders understand that they will not escape the consequences of excessive risk-taking. In short, although vigilance is necessary, I believe the systemic risks inherent in the banking system is well managed and well controlled. That should sound familiar to you, since it was part of your response to a question I asked about the systemic risk of large financial institutions at your last confirmation hearing. I'm going to ask that the full question and answer be included in today's hearing record. Now, if that statement was true and you had acted according to it, I might be supporting your nomination today. But since then, you have decided that just about every large bank, investment bank, insurance company, and even some industrial companies are too big to fail. Rather than making management, shareholders, and debt holders feel the consequences of their risk-taking, you bailed them out. In short, you are the definition of a moral hazard. Instead of taking that money and lending it to consumers and cleaning up their balance sheets, the banks started to pocket record profits and pay out billions of dollars in bonuses to their management. Because you bowed to pressure from the banks and refused to resolve them or force them to clean up their balance sheets and clean up the management, you have created zombie banks that are only enriching their traders and executives. You are repeating the same mistakes of Japan in the 1990s on a much larger scale while sowing the seeds for the next bubble. In the same letter where you refused to admit any responsibility for inflating the housing bubble, you also admitted you do not have an exit strategy for all the money you have printed and the securities you have bought. That sounds to me like you intend to keep propping up the banks for as long as they want. Even if that were not true, and I'm a little over my time, but this is very important, the AIG bailout alone is reason enough to send you back to Princeton. First, you told us AIG and its creditors had to be bailed out because they pose a systemic risk, largely because of the credit default swap portfolio. Those credit default swaps, by the way, are over-the-counter derivatives that the Fed did not want regulated. Well, according to the TARP Inspector General, it turns out the Fed was not concerned about the financial conditions of the credit default swap partners when you decided to pay them off at par. Not at a discount, but at 100%. In fact, the Inspector General makes it clear that no serious efforts were made to get the partners to take haircuts, and one bank offered to take a haircut, and you declined it. I can only think of two possible reasons you would not make then New York President Fed Geithner tried to save the taxpayers some money by seriously negotiating or at least taking up UBS on their offer of a haircut. Sadly, those two reasons are incompetence or a desire to secretly funnel more money to a select few firms, notably Goldman Sachs, Merrill Lynch, and a handful of large European banks. I cannot understand why you do not seek European governments' contribution to this bailout of their banking system. From monetary policy to regulation, consumer protection, transparency, and independence, your time as Fed chairman has been a failure. You stated time and again during the housing bubble that there was no bubble. After the bubble burst, you repeatedly claimed the fallout would be small, and you clearly did not support the systemic risk that you claimed the Fed was supposed to be looking out for. Where I come from, we punish failure, not reward it. That is certainly the way it was when I played baseball, and it is the way across all America presently. Judging by the current Treasury Secretary, some may think Washington does reward failure, but that should not be the case. I will do everything I can to stop your nomination and drag out this process as long as I can. We must put an end to your and the Fed's failure, and there is no better time than now. Your Fed has become the creature from Jekyll Island. Thank you.
Care to respond to that?
Let me just correct one point. First, I'm not sure, I think there was some misunderstanding and misinterpretation of the SIGTARP's report, but we absolutely believed that AIG's failure would be an enormous systemic risk and would have imposed enormous damage, not just on the financial system, and this is the key point, on the entire U.S. economy and on every American. It is not reasonable to talk about letting large firms fail as if that would have no effect on credit extension and on the broader economy. The Lehman example should be enough for everybody. With respect to the counterparties, there's a long discussion there which I won't go into, but I'll just point out just one issue you raised. UBS offered a 2% discount if and only if all the other counterparties would accept one. That was not the case. We did our best to get a reduction there, but given that AIG was not bankrupt, and given that we were not going to abuse our supervisory power, we really had no way to create a substantial discount.
Mr. Chairman, I don't want to take any more time, but the fact of the matter is AIG was 80% owned at that time by the federal government.